Welcome to Iraqi Dinar Update, your go-to source for the latest news, expert insights, and real-time developments on Iraq's currency, economy, and financial reforms. Whether you're a long-time investor or just curious about the dinar, you're in the right place. It's hard to look at Iraq's current exchange rate and not feel that something simply doesn't add up. When you examine the situation closely, the level of foreign reserves, the country's minimal external debt, the immense natural resource wealth, and the strategic economic reforms being implemented, you begin to realize there's a serious gap between reality and the official rate of the Iraqi dinar. The issue many observers highlight is that the dinar remains artificially low, a manipulated rate, some would argue, that does not reflect the country's true monetary strength. In fact, it's almost astonishing how a nation with over $100 billion in foreign currency reserves, an abundance of oil exports, growing gold holdings, and a population pushing forward toward modernization can remain tethered to a valuation system that has barely budged in decades. This reality sparks deep questions and valid speculation, particularly among economists, investors, and geopolitical analysts. Let's break this down. Iraq is sitting on one of the most resource-rich pieces of land on Earth. Its oil reserves are ranked among the top globally. The country produces several million barrels of oil per day, and with oil prices being a cornerstone of its revenue, the inflows of hard currency, especially US dollars, are significant and consistent. This revenue is what feeds Iraq's foreign reserves. When we say Iraq has $100 billion in reserves, that's not just a number to casually mention and move past. That level of reserve puts Iraq ahead of many developing and even developed nations. It gives the Central Bank of Iraq enormous firepower to support its currency, manage inflation, and stabilize its financial system. Now pair this with another astonishing fact. Iraq has virtually no external debt to speak of. The debt-to-GDP ratio is extremely low compared to many other countries in the region and across the developing world. Contrast that with countries like the United States, Japan, or even emerging markets like Egypt or Turkey, which have massive sovereign debts and still maintain relatively strong or even appreciating currencies. Iraq, on the other hand, is operating from a position of net financial strength, yet the dinar trades at a rate that suggests instability and weakness. This is where the idea of manipulation or artificial suppression starts to enter the conversation. Then there's the economic logic. A country's currency is supposed to reflect not just its current account or export numbers, but its reserves, its productivity, its fiscal responsibility, and its ability to generate sustainable wealth. Iraq checks many of these boxes. Its state-owned enterprises are being modernized, foreign investment is slowly returning, and diplomatic relations with economic powerhouses like the United States, China, and Turkey are intensifying. It's also important to consider the broader geopolitical landscape. Iraq is situated at the crossroads of powerful interests: the US, Iran, China, Russia, all of whom have a stake in Iraq's economic and political direction. The US continues to work closely with Iraq on monetary and financial policy, and the IMF and World Bank have provided consistent guidance and structural support. These institutions are not blind to the fact that Iraq is operating well below its potential. At some point, the dinar must either be adjusted to reflect economic fundamentals, or Iraq risks remaining perpetually dependent on foreign currency systems, which can erode sovereignty. The issue of currency manipulation or artificial suppression is a sensitive one. Officially, Iraq uses a managed float exchange rate regime. This means the central bank controls the rate indirectly by controlling the supply and demand for dollars through its foreign currency auctions and reserve balances. While this approach has its benefits in stabilizing inflation and maintaining predictable trade flows, it also prevents the market from organically determining the true value of the dinar. Critics argue that as long as this structure is in place, the dinar cannot appreciate, even if the fundamentals support a stronger valuation. In other words, the currency remains trapped in a pre-reform paradigm, held back by legacy systems, political uncertainty, and a global monetary order that favors the status quo. However, change does not always happen quickly. Iraq is not merely battling economic inertia, but decades of war, occupation, internal corruption, and regional instability. It has had to rebuild trust in its institutions, re-establish credibility with international markets, and develop the internal capacity to manage a free-floating or internationally traded currency. This takes time, and while many investors and analysts, particularly those holding dinar, grow impatient waiting for a so-called RV or revaluation, The reality is that any such change must be deliberate, strategic, and tied to structural reforms. Simply flipping a switch on the exchange rate without economic scaffolding to support it could lead to inflation, instability, or capital flight. Yet this doesn't mean the current exchange rate is fair or sustainable forever. The pressure for change is mounting. The Iraqi people are increasingly demanding transparency and dignity in their economy. Businesses want access to financing, easier cross-border transactions, and stable pricing for imports and exports. The government wants to wean itself off oil dependency and create a private sector-driven economy. All of these factors converge on one key lever, the dinar. When it moves, it will signal more than just monetary reform. It will represent a shift in Iraq's identity, from a post-conflict economy surviving on aid and oil to a nation exercising full control over its economic destiny. So when someone says, if the Iraqi dinar isn't manipulated, I don't know what is, they're not being dramatic. They are pointing out a massive inconsistency between Iraq's real-world economic health and the market signals being sent by its currency. They are questioning why a country with nearly no debt, massive reserves, and valuable resources is being valued like a failed state. They are asking why international institutions and markets haven't yet caught up with the real story unfolding in Baghdad, Basra, and Erbil. And they are expressing frustration that for all of Iraq's efforts, the dinar remains locked in a valuation that ignores the country's growing strength and promise. In time, this will change. Currencies can only remain misaligned for so long before economic forces push them back into balance. Whether through IMF negotiations, WTO accession, currency liberalization, or external market pressure, the dinar's day of reckoning will come. And when it does, it will be because Iraq, finally, is being seen for what it truly is, a sovereign nation with wealth, resources, and a currency that deserves to reflect its reality. Thanks for tuning into Iraqi Dinar Update. If you found this content helpful, be sure to like, subscribe, and hit the notification bell so you never miss a beat on Iraq's evolving financial landscape. Stay informed, and stay ready.